Good morning friends and welcome to the pre-market view. What a day it was yesterday. After the budget announcements, we saw a major carnage, and it was mainly because of some amount of disappointment on the budget, as the expectations from the finance minister were high, as he understood what the industry wants, what the markets want, and there was nothing concrete to revive that sentiment. That led to some amount of disappointment. Also, we had some amount of confusion about the tax residency certificate, and there was some delay on the part of the government in giving clarification on that, and we expect that today you could see a very clear explanation of what it means and whether it can really lead to some amount of negative sentiment because of the provision which has been incorporated. And also it coincided with the expiry day, and we had a major selling in the last about 1 hour of trade to the tune of about 1000 to 1200 crore. So we substantially closed below 5700, which is definitely not comforting. And today morning when we look at the global markets, US markets were flat, no major cues to look at, and European markets were up about 0.5 to almost about 1%. And when we look at the Asian markets today morning, most of the markets are flat, and we had a Chinese PMI data that came out at 50.1, slightly below expectations. And in terms of flows, friends, yesterday FIs were net sellers in the cash market to the tune of almost about 1400 crore, and the domestic institutions were buyers to the tune of about 430 odd crore. On that note, let me invite Sadhna to take us through important F&O cues, data and strategies that we can have in the F&O markets.
Good morning friends, let's have a view on derivatives. Yesterday markets have started the day on positive note. After that, markets were unable to sustain on high levels as our Finance Minister P. Chidambaram has delivered its speech of Union Budget of 2013 and 14. Nifty Future started the series with 1.48 crore shares in open interest, and PCR also starts with a mark of 0.90. Talk about rollovers activity. If we see in the graph, Nifty Futures for the current month stands at 54% and 80% for the market-wide rollover activity, which is very low as compared to last 3 months and 6 months average data. Talk about options activity, 5700 followed by 5600 put strike price has seen a good number of activity, whereas 5800 followed by 5900, 6000 and 6100 call strike side has seen a very good number of activity. Overall, our bias for the market is negative, and our range for the month would be 5520 on lower side and 5880 on higher side. On the stocks front, we recommend one can go short on Grasim Industries with a stop loss of 3026.65, Hero Motocorp with a stop loss of 1691.35, and IGL with a stop loss of 261.80.
Friends, first let me take you through important highlights of the budget. The fiscal deficit for next year is pegged at 4.8%, which is definitely quite positive from the FI sentiment point of view. But the composition of this revenue forecast and the expenditure estimates are something that one is not very clear about, because the finance minister has increased the tax rates for the corporates and the super rich, and also there have been certain assumptions on the expenditure cuts. So one is not sure about how realistic those expenditure cuts are in the current situation. And more importantly, the revenue growth of 16 to 17% is considered realistic in the current macro environment we are operating in. But in case of this budget, the revenue expectations have been pegged at about 20 to 21%. A part of that could come in because of the higher tax rates, but the growth that the FM is working with could be a little more than what is realistically possible. Also, the assumptions on both the disinvestment proceeds and the telecom receipts are definitely on a higher side, and it would be extremely difficult to imagine that the government will be able to mobilize about 50 to 60,000 crore by way of divestments and auctions the way things are at this point of time. And also there has not been any clarity about the rollout of the GST as was widely expected. So this is also something which has not gone down too well with the market. So overall, yes, in terms of the fiscal deficit number, the budget looks okay, but there are serious question marks on the assumptions which would drive to that number, and particularly the FM has actually not been able to give any specific proposal for revival of the investment cycle, which has definitely not gone on too well with the markets. Talking about the sector specific proposals and how it can affect different companies, first of all, on the media, there has been a clear roadmap for the phase 3 auctions, which is positive for the existing players like Entertainment Network and others, as it will help them attain the scale and improve their profitability. But the auction pricing will play a very important role in the success of the implementation of these auctions. Talking about the retail sector, the abolition of the excise duty on the branded ready-made garments is definitely positive for companies like Keval Kiran Clothing and Raymond, which are under our coverage. And for oil and gas, some positive news is the likely review of the natural gas pricing would be positive for companies like ONGC, Oil India, and also Reliance Industries. And road construction, the finance minister has indicated that he will try and remove all the obstacles faced by the construction sector, which will be positive for road developers like IRNFS Transport and IRB Infrastructure. For cement, some negative news for India Cement, as the increase in the countervailing duty from 1% to 2% would have a negative impact on India Cements, as it accounts for higher dependence on imported coal. And in case of automobiles, negative development, as there has been an increase in the excise duty on SUV from 27% to about 30%, and an increase in the custom duty on the luxury vehicles from 75% to almost about 100%. Both are negative for companies like Mahindra and Tata Motors, which have a larger component of the SUV in their portfolio. Also, the GDP data for the last quarter came out at about 4.5%, which is definitely quite negative, and this is against the expectations of about 4.9%. So this is something which is definitely negative from a market sentiment perspective. United Spirits, some positive news, as the Competition Commission has cleared the United Spirits Diageo deal. So one can go long on United Spirits on the back of that with a stop loss of 1804 and a target of about 1896 to about 1931. SpiceJet, some negative news, as the jet fuel prices have been hiked for the second time by about 3.8%. So one can go short on SpiceJet with a stop loss of 36.25 and a target of about 34 to about 33.5. Lupin has lost an important case against Mylan for one of the cholesterol reduction drug. So one can short Lupin with a stop loss of 597 and a target of about 567 to about 555. And in another news, Adani Enterprises is looking to offer about 8.5 million shares through stock exchange on March 4th. The floor price would be decided today after trading hours. That's it from all of us, friends. Have a great weekend and see you on Monday morning.